Hi everyone, and today in this video we will discuss 3 transformer companies which I think might do very good in the coming future. So any company or stock we discuss over here is not a buy or sell recommendation. Okay, so let's quickly come to the first company. The first transformer company which we are going to discuss is Shilcha Tech. So Shilcha Tech is one of my favorite company because just look at their financial ratios. So currently trading at a PE of 27, they have ROCE and ROE of 71.3 and 52.9. And if you compare these ratios with other transformer companies, so you will see Shilcha is going to have higher margins, and one of the main reason is because their half of the revenue is in the export segment, and because of that reason their ROC and ROE is way higher. And along with that, currently they have a market cap of almost 5,000 crores, and just look at their PEG ratio, it's 0.23. So anything below 1.5 is very good, and they have 0.23 which is very low. Then if you look at their product portfolio, so they have transformers which range from 5 kilovolt ampere to 3000 kilovolt ampere. Then if you look at power transformers, so it range between 3 megavolt to 15 megavolt ampere. Then if you look at their geographical split, so 52% of the revenue comes from the export segment, and they are exporting to over 25 international markets across 5 continents like USA, Iceland, Oman, UAE and etc. Then afterwards, if you look at their median PE ratio, so their 5-year median PE ratio is 20.4 as we can see over here, and now currently they have a PE ratio of 27. And if we compare that with the EPS blue bar, so it's currently very undervalued. Then afterwards, if you look at their current quarterly results, so we can see in September 2025 they have given a revenue of 171 crores with EBITDA margin of 31%. And if you look at the net profit and EPS, so they have given a net profit of 46 crores with an EPS of 40. So there is a pattern in the transformer segment that usually the June quarter is always slowish, and we can check that in their previous quarterly results, that in June 23 they gave a revenue of 67 crores compared to in March 23 of 95 crores. And same we can see over here, in March 2025 they gave a revenue of 232 crores, but in June 2025 they gave a revenue of 159 crores. So that is one of the reason why I am bullish in this segment. Then afterwards, if you look at their balance sheet, so their current reserves is 408 crores and currently they have zero debt. So company operating with zero debt, very high reserves and good cash flow is definitely a very good sign. Then afterwards, if you look at their cash flow, so currently their CFO is 40 crores positive and their net cash flow is almost negative 4 crores. And one of the reason why their net cash flow is negative is because they have invested more into the investments and in the fixed assets. Then afterwards, if you look at their ratios, so currently their cash conversion cycle has increased from 93 days to 120 days, which is not a good sign. But even though their cash conversion and working capital days have increased, they were still able to improve their ROC from 54% in 2023 to 71% in 2025. Then afterwards, if you look at their current shareholding pattern, so 64% is with the promoters, and as of now there is no big FI or DIS over here, and public holding is 33%. Then along with that, if you go to the announcement part and click on the capacity expansion, so recently they have given a news. So as of now their existing capacity is 7500 megavolt ampere, but recently the company is going to increase more capacity by 6500 megavolt ampere, and for that investment they are going to invest 90 crores, and that will be done by the reserves. And now let's take a look at their technicals. So if we take a look at their share price in Jan 23, so it was trading at almost 350-400 rupees, but after that it has given a very crazy bull run, and from 350 rupees it gave a high of almost 6,000 rupees in November 2024. So that is almost a 20x jump in the stock price. And during April 24, it was trading at the same price which it is currently trading, but during that time their PE was almost 50 and now currently it's 27, which justifies that it's currently undervalued. And since April 24, now it's consolidating in a range. So what do you guys think about this company? Write down in the comment section. And now let's come to the next company, which is Atlanta Electricals. So it recently came with an IPO, and currently with a market cap of almost 7,500 crores, they have a stock PE of 60 and they have a ROC of 50.2 and ROE of 40.8. So this company is also having very good financial ratios, and if you look at their PEG ratio, so that is 0.67, which is a good sign. So Atlanta makes power, auto and inverter duty transformers in India, and as of March 2025 they are present in 19 states and 3 union territories. Then afterwards, if you look at their revenue split, so they have top 2 customers which contribute almost 40% to their revenue. So that is one of the red flag we can see over here. So the top 2 customers they have is the Gujarat Energy, which is 29% of their revenue, and Adani Green, which is 10% of their revenue. Then if you look at the revenue breakup, so most of the revenue comes from the power transformer, which is 76%. And recently they came with an IPO and they reached 687 crores. So they will repay their borrowings, which is 79 crores, and 210 crores will be used for the working capital requirements. Then afterwards, if we compare their ratios with other players in this segment, so compared to other players, they have higher ROC and ROE and players like CG Power, Siemens, ABB. And if you look at their financial numbers, so in March 2024 they gave a revenue of 868 crores, and in March 2025 they gave a revenue of 1244 crores. And along with that, if you compare their EBITDA margins since March 2020, so from 8%, now currently they have given 16% EBITDA. So we can say over here that they might be there in operating leverage cycle. And along with that, just take a look at their PAT, that in March 2022 they had a PAT of 17 crores, but in 3 years they have come up to 119 crores. So that's a 10x jump in the net profit. Then afterwards, if you look at their balance sheet, so currently they have reserves of 336 crores and they have borrowings of 141 crores. And their fixed assets are also increasing nicely from 46 crores in March 23 to 76 crores this year. Then afterwards, if you take a quick look at their cash flow, so currently they are positive CFO and they have given 86 crores of CFO in March 2025 and they have a net cash flow of 0. And one of the main reason again over here that they have invested heavily in the fixed assets. Then afterwards, if you look at their working capital days, so they have maintained their working capital very nicely compared to Silchar. And next, if you look at their shareholding pattern, so currently promoters is having 87%, then FIs are holding almost 2%, then within the DI there is HDFC Mutual Fund which is holding 1.3%. And now let's look at their technicals. So as this company was listed almost 1 month ago, so we don't have much data stock price wise, but they got listed at almost 750 rupees and now currently it's trading at 985 rupees. But after looking all the data points, I think this company might do good in the coming future. And now let's come to the last company, which is Transformer and Rectifiers. So this is a slightly bigger company compared to Silchar and Atlanta, and they have a market cap of almost 14,000 crores, currently trading with a PE of 54. So their ROC and ROE is also looking very good of 28 and 23.4. And even if you look at their PEG ratio, which is 0.37, is a good sign. Then afterwards, if you look at their geographical split, so most of the revenue is from the domestic, which is 92%, and export is almost 8%. Then afterwards, if you look at their order book mix, so this is kind of similar like Atlanta Electricals, where power transformer is consisting most of the revenue. And one of the important point of this company, that they are the second largest transformer manufacturer by capacity, where they have 3 operating plants in Ahmedabad and they have a combined capacity of 40,000 MVA. And if you look at their future capex, so the company is expanding its capacity by 15,000 MVA to manufacture transformers. Then afterwards, if you look at their median PE ratio, so their 5-year median PE ratio is almost 57.7 and currently they are trading at a PE of 54.7. And if you compare their PE with the EPS bar, so it's very undervalued. Then afterwards, if you look at their financial numbers, so in March 2023, they had a revenue of almost 1,400 crores and as of now, they have 2,200 crores of revenue. And one of the interesting part is their EBITDA margins, where it was around 6 to 9%, but now currently it's 17%. So again we can say over here that this company is in the operating leverage cycle. And another interesting point is the net profit, which was only 14 crores in March 2022 and now currently it's 263 crores. So just take a look at their EPS growth from 0.53 to 8.71. That's a crazy jump. And even if you look at their compounded sales growth, so 5 years has been 24% and 5-year profit growth has been 251%. So financial statement wise, the company is looking very good. Then afterwards, if you look at their balance sheet, so currently they have a reserve of almost 1,200 crores and they have a debt of 283 crores. And most of the debt is their short-term borrowings, which is 202 crores. Then afterwards, if you look at their cash flow statement, so their CFO has went up from 29 crores to 157 crores in 1 year. Then afterwards, if you look at the ratio part, so they have significantly reduced their working capital days from 119 to 34 days. So this is definitely a very good sign, which has also helped them increase their ROC from 15% to 28%. Then afterwards, if you look at their current shareholding pattern, so promoter is having 64%, then FIs are holding 11%, where Goldman Sachs have almost 1.5% stake in the company and Invesco India Fund, they have almost 1%. Then afterwards, if you look at DIS, so there is HSBC Fund, who is holding almost 3.65% stake in the company. So that's a good amount of stake HSBC is holding in this company. And now let's look at the technicals. So during Jan 2023, it was trading around 30 rupees, and after that it went up from 30 rupees to 650 rupees in 2 years. So that is again more than 20x jump in this company. And even after going up so much, it was still trading at a PE of almost 100, and now currently, after giving good quarter-on-quarter results, now it's currently trading at 54 PE, and now currently for 1 year it has been consolidating in a range. So thank you for watching this video. I am very bullish on these 3 companies. What do you guys think? Write down in the comment section, and see you in the next video.